Hey traders, Raghee here, and in this free video we're going to talk about next steps. So in the past few videos we've talked a little bit about zones, and one of the things that we've been doing in the futures room is preparing for what really would amount to essentially a quadruple, if not, maybe this is the fifth time, depending on how many peaks you think we've hit in this zone, that we've exhausted at the top of the range in both the S&P and the NASDAQ, getting up in that more extreme overbought range. Here's the NAS. We haven't done the same in the Dow or the Russell. Those are different market structures. We'll get a little bit more into that in the premium video, but let's talk about next steps. All right, and next steps meaning we've sold off from the zone that we've been talking about for some time, and think about how precise this really is. I mean, we're talking specifically about this zone. I'm not saying let's get in, presumptuously here or here. I mean, we are talking specifically about this area here, and these lines are coming from previous Darvis levels, so they're perfectly, absolutely easy to identify and objective. There's a process by which those lines are drawn. They're automated, so all we need to do is just kind of extend those lines over so we have a zone that we can recognize that we feel is an overbought zone. Okay, so for next steps, what I'm looking at is really a twofold. One, I think the upcoming Brexit vote could have some positive impact on the global markets. And we do, right now, it seems that Boris Johnson, Prime Minister, has the votes required to, by I believe just 4, get it through the UK Parliament. And of course, remember, there's still the European to go, but this is probably as close as we've gotten. I believe Financial Times has already said they think that Johnson has the numbers he needs for the deal. So I believe it's a 2 to 4 vote, though, majority. So the other thing is that once this is done, and then, obviously we'll go to Europe, so there's the uncertainty, but we might get a little bit of optimism. But before the markets closed, the fact that Johnson had enough votes was already known. So interestingly enough, the markets did not respond to that. All right, so that's a different sort of headline and news reason. But if we're going to follow through to the downside on Monday, I would have liked the market to close a little closer to the lows of this candle. Having the wick to the bottom of the body is not necessarily very bearish, although the fact that we got down there does suggest traders are willing to drive the markets lower and off this resistance, which is really what I'm harping on here. If we can get through the +1, the +1 standard deviation on the V-score, I think there's a real good chance we'll see follow through, getting us down to the lows around the 7,600 level on the NAS. So for those of you asking, all right, Rog, well, how low is low? What's your anticipated downside? Again, we'd have to break the +1 standard deviation here on the S&P, and I think we have a shot at 2,900. So notice I am looking for major psychological levels to be hit. That's where we'll likely have some size. So let's not make this complicated. We are coming off an overbought level. We are looking for some of these markets to retrace to previous support levels. I'm not talking about an all-out downtrend, but rather the market ping-ponging from overbought to oversold to overbought again, and then now we'll look to see where oversold may be going into next week. So yes, I am anticipating some weakness in the premium video. We'll talk about how the ES, NQYM, and RTY drive us to things like the XLP, XLU, ITB, and XHB for opportunities, and we'll talk about that also again next week. All right, everyone, enjoy your weekend, and I'll see you in the next update. Thanks as always for listening.